Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, yesterday's action, we saw a huge reversal with the NASDAQ leading the way up and then flipping around. The NASDAQ did reach the 11,000 on the futures that I talked about over a week ago. We satisfied some upside projections, but there's much more going on in the markets than you might think. I'm sure that you're expecting to hear me talk about the negative implications of the downward reversal that we saw. That's not what I am here to report to you. Those of you that have been watching this channel for a while know that I always tell you that I'm data driven. One of the key elements that came out of our database tonight was not what you'd expect it to be. I'm sure everybody's expecting that we'd get a monster amount of selling. Those of you that use the WaveTech tool have already seen this. What we had was nearly 4,000 new buy signals. The database went from 68% bullish to 74% on the open in the morning. So there's going to be a monster amount of buy signals telling us that new trends have developed, causing the markets to rotate one more time. I had discussed this over the past several days that we would see the database expand out, but I have to be honest, I did not expect to see that happen today. There were a lot of stocks that broke out of patterns. Even though many of them closed at the middle or down in the lower end of the range, they were still higher, breaking out of their technical pattern. In tonight's technical section, I'll go through some key levels that I believe will continue to hold. We'll see the markets resume to the upside. One of the things I will discuss is a new change in leadership, and I believe this is going to be a very substantial change. I've been talking about the next rally would see the small caps lead the way. However, when I was doing my analysis for tonight, there is another indice that has emerged as a potential leader. It's not been confirmed yet. The NASDAQ is likely to take second position to the S&P 500 as we're starting to see some substantial rotation within the index. Let's go ahead and review the database and take a look at the chart so we can see what's likely to happen as we go into Tuesday's session. As we begin tonight's analysis, we're going to look at the WaveTech research tool, going to research on a daily search and then going to the all stats page. What you'll see here is we now have 12,350 long signals, or 74.55%. Now, I mentioned in the opening comments we had nearly 4,000. It's actually 3,700. We had 3,600 of the 1.2 long triggers and only 66 of the 3.2. So we did see a substantial rotation coming into the market, pushing the overall database to 74.55%. Reviewing the short-term sector rotation, the only new buy in sectors is basic materials. As we look at that, you'll see also chemicals, plastic and rubber is a buy, and we're continuing to see this rotation occur. So when we look at the short-term rotation, we'll see a lot of activity in some of these subsectors as well. When we look at the group level, we go down to the bottom of the page looking at the new buy positions on an individual industry group. You're going to see advertising, chemical, construction, crops, electric utilities, insurance, investment services, personal household products, restaurants, retail, and tires. It's interesting that restaurants would come into play since California's shutting down their restaurants, even though they were only about 30 to 40% open overall. But the sector rotation is substantial from the standpoint of what's going on in the rotation that's happening in the markets. The spread chart that I'm showing you right now is what the ratio looks like versus the NASDAQ and the S&P. As we know, this has been in a negative rotation. The NASDAQ has led the way up until today. We did see a 2% and change downside, with the S&P only down 1%, and I expect to see some rotation here. As I mentioned earlier, this is not confirmed yet. This is the weekly ratio. While it's at an extreme, it's telling me that we're going to correct this, and we could see some leadership for the next 4, 6, maybe as many as 10 weeks as we go through the rest of the summer. Starting with the S&P 500 futures, What we saw yesterday was a substantial reversal, but it continues to hold the 10-period moving average, which is at 31.41. Overnight, we've traded down to 31.43. That PPM1 is at 0.34, which is in trend level, PPM2 at 0.20, and PPM3 at 0.26. So the PPMs are price pressure momentum, and they tell us the angle of attack. Right now, there's only a 30% probability for the market to close below the 31.41 level today. This indicates that we're likely to see a bounce and a recovery from yesterday's sell-off. As we look further at the grid, you'll see that S1 is 31.30. We printed 31.43 overnight. We could hit that number early in the morning, but expect to see an S1 R2 trading session today. Now, yesterday we saw a crazy situation as we look at the cash market. We traded into the extreme projection, which was 3235.03. The actual high was 3235.32. Market reversed from there. Many of you indicated on my Twitter account that you were able to catch a good piece of this trade. It was a substantial one. We traded down to the 31.49 level, which was virtually an S3 hit at 31.46.85. So we did an RXT extreme on the upside and an S3 on the downside. Not seen this type of volatility for a while. But just like in the futures, we have support at 31.38, yesterday's low 31.49. So that's going to be your key number as we go forward. That number is still rising at 0.47 per day. It's only a 30% probability to decline below that 31.38 level. So I'm expecting to see a recovery, and depending on where we close, if it can close back above R1, which is 31.96, that will set a good tone as we come into Wednesday. And if we look at the PPMs on the cash, you'll see that PPM2 has crossed through its first and second derivatives. This, in combination with this big boost in the database on a short-term level, suggests that we're still going to be able to hold these numbers. And I mentioned in the opening comments that I expect support to hold. That is the support, 31.38. The extreme would be 31.11. There seems to be a lot of hysteria around yesterday's reversal, and all we really did was trade back to where we were on Friday morning. So there's no real big change in here. Now, if we see some follow through and we close lower today, then it's possible the market would continue to decline towards some of these moving average 3011, the possibility of going to 3081. Based on the PPM1 being at 0.47, it doesn't appear that will be likely. We're seeing some positive move overnight, but nothing substantial. We'll see how the market opens in the morning, but I do expect these support levels to hold. Looking at the NASDAQ futures, experienced an outside reversal bar, and this is substantial since we were rendered an all-time new high. The high yesterday was 11,058. We saw the reversal off of that level and closed lower. Now it will be critical to confirm this reversal. A lower close today will be necessary, but just like in the S&P, there's a substantial upward rising moving average, and PPM1 is up at 0.64. There's less than a 20% probability to close under 10,470. Now we're currently trading 10,638. So any decline down to that level would represent a buy. The market grid confirms that moving average value. We're looking at S1 very similar to the 10,536 number. So an S1 hit would be an absolute buy for a trade. What we're likely to see here is a consolidation for the next several days. There's a high likelihood that we're going to trade in a sideways range within the grid between that 10,526 and R2 10,755. Now we're seeing 38 handles up on the futures overnight. It'd be very easy to see an R3 or even an RXT, which would be at 10,911. Expect to see some rebound and some firmness in this market tomorrow. The only on the downside, the key trigger will be the 10,526. If we broke through the 526.50 number I don't think we'll stay under it, but we could trade down to 10,444 on the S2. Just like in the S&P, my expectation is an S1 R2 session today. A quick glance at the weekly graph on the NASDAQ, you'll see S2 on the weekly is 10,553. So there's a cluster of numbers right there, 10,556, 10,553, and then S3 is 10,403. So there's substantial support underneath this market. Since this is a weekly chart, we're a long ways from confirming any type of weekly reversal at this time. But this configuration is what tells me that we're likely to see more of a sideways range here, the S&P to move back above the 3,200 level and moving up to that 3,214 level while the NASDAQ waffles in a sideways pattern. This will complete tonight's video. Don't forget we have the WaveTech training session at 4:30 Eastern Time on Tuesday. Look forward to seeing you there.